StoneCo is a disruptive Brazilian fintech player that received a lot of attention as a Warren Buffett investment. However, the stock price has been hovering around the mid 30s mark and it has had a very difficult time. Why has it been such a falling knife? In this video, we discuss the two main reasons for the stock price decline. Firstly, we will discuss the FBI raid of a PAX warehouse in Florida. We will then discuss the Stone credit business losses. Hope you enjoy. A quick look at the disclaimer section. PAX Global Technology is often described as one of the global leaders in the payment terminal research and development industry. It was founded in 2000 and it was initially a subsidiary of He Sun Group. After being spun off, PAX was listed on the Hong Kong Stock Exchange in December 2010. The company has done remarkably well since then. However, October was not a very good month for PAX. It all started with the Krebs on Security article that stated that the Krebs on Security heard from a trusted source that FBI began investigating PAX after a major US payment processor started asking questions about unusual network packets originating from the company's payment terminals. According to that source, the payment processor found that the PAX terminals were being used both as a malware dropper and a repository for malicious files, and as a command and control location for staging attacks and collecting information. This then started a plethora of negative press, from BBC to Bloomberg, all reporting this FBI raid. PAX used to have a significant percentage of its sales from China in the year of its IPO. However, today, the company has presence in more than 100 countries, and more than 90% of its sales comes from abroad. As per the breakdown of the sales by geographical location provided by PAX, around half of its sales comes from Latin America. And that's where StoneCo comes in. StoneCo, headquartered in Brazil, is a reputable fintech player and has repeatedly indicated its substantial dependence on PAX Global as a supplier of points of sales or POS terminals. PAX Seguero, another major player, has also indicated that PAX is the sole supplier of POS terminals. And unsurprisingly, we saw a decline in PAX and Stone's stock price since the negative news flow regarding PAX's FBI raid. A two-page short report by Viceroy Research did not help matters at all. In that report, Viceroy made the case that PAX Seguero and StoneCo are not Seguero and they should be shorted. It remains to be seen how ugly this will turn out to be. But for companies like PAX Seguero and StoneCo, things are looking jittery. There may also be potential legal liabilities if potential data was compromised. The Brazilian General Data Protection Law is in force since September 2020, and it's largely aligned to the EU GDPR, or the EU General Data Protection Act. In StoneCo's defense, when they were sourcing suppliers, this was not a small player. PAX Global was one of the world's biggest supplier of POS terminals. This is not an excuse for StoneCo though, but lawyers likely would use this argument to reduce legal liabilities that may appear in the future. China will also be taking another hit if further evidence suggests if suspicious play was at work. However, by far the most dominant issue for StoneCo has been the issue regarding the registry of receivables. In order to explain what really happened, let's have a look at the status quo before the 7th of June 2021 and what the new framework in Brazil is. Under the prior transitory rules, a merchant could use its current and future receivables of a specific card network such as Visa or MasterCard as collateral for loans from a financial institution. It worked as follows. There was a creation of collaterals and the lock of receivables. When entering into a loan agreement with the merchant, a financial institution sets performed and future receivables as collateral for the loan and determines the appropriate bank account in which the cash flows from those assets should be settled by the merchant's card acquirer. This was called the lock of receivables because it was locking those cash flows to a specific bank account. If we discuss the benefits of the lock, it secured repayment of the loan even when the merchant changed acquirers, and it provided full visibility to the guarantee. This was also quite simple to operate. There were also some limitations to the transitory rule. The first limitation related to the effectiveness of the lock, which resulted in some fragility within the collateralization process. These issues became more acute during the pandemic, in which lockdowns and other social distancing measures hit merchants hard all over the country, leading to a substantial reduction in their sales. As a result, some card acquirers and sub-acquirers who did not respect the credit locks enabled merchants to shift their card transactions to new acquiring services, bypassing the collateral guarantees they had with other players. The new rules substantially changed the way guarantees were set and how all players operated. Firstly, all players were forced to integrate to one of the registries, which imposed full transparency on receivables being used as collateral for loans. The regulation also created an additional financial asset called the Receivables unit that is defined by the amount due to a merchant on a given day for transactions related to specific card network processed by a given acquirer. The acquirer, in this case, can be Stone. Thirdly, these receivable units were also registered in one of the 3 authorized registries, and any financial institution seeking to extend credit with a receivables unit as collateral had to take some stringent actions, such as verifying if the asset has not been given as a guarantee to another creditor, or verifying the priority of contracts that affect the receivables units from a merchant. This new set of rules and the definition of this additional financial asset clearly allowed the merchant to use its current and future cash flows more flexibly, allowing for, among other things, several credit operations backed by such cash flows. Mistakes were made in implementing this new framework. StoneCo started issuing loans to its customers while building its credit business, and the new receivable system that was implemented started to show some major problems, especially on rules related to loan collateral as well as settling of funds. For StoneCo, this was visible through loan losses and the need to temporarily stop the disbursement of new loans as of June. StoneCo started making higher bad debt reserves and implemented higher loan coverage reserves for loans that would likely not be paid, while also making adjustments to the fair value of its credit portfolio. Overall, the credit business impacted the Q2 revenue numbers by 397 million Brazilian reals. StoneCo expects these headwinds to continue for at least another 3 to 6 months, as indicated by the management in its earnings release. In the end, I would say that StoneCo's fiasco with the credit product demonstrates poor execution, where they over-relied on a faulty system for loan collateralization. They also had weak underwriting standards during a time when Brazilian SMBs are facing significant pandemic headwinds. Looking back, StoneCo has had a much better longer track record in the past. They have had strong growth for several years and have also maintained profitability. The credit losses look manageable, and StoneCo has been honest and open about the issues it has faced and has transparently laid out the corrective measures for the future. As far as the PAX investigation is concerned, there are no updates on the timeline from FBI. We at MoneyWiseSmart attended a call with the management team of PAX, and other than some general updates on the company's business situation and reassurances from its customers to continue using its products, PAX has not further commented on the FBI investigation specifically. If you found this video useful, then I urge you to join our research platform. It's completely free, there are no hidden costs, and that's the place where we publish top quality research covering companies with the capability to compound in the long term. And that's also the place where we publish research discussing key investment concepts. The link is in the description section below. Guys, if you found this video useful, then don't forget to hit the like and subscribe button.